is the idea that, and I've been reading this on the stream and I've been talking to it with some of our traders on the desk, where it's really tough. When, April we had a great month, and a lot of that had to do with, especially for the younger, less experienced traders, is they were starting to see some really good chart setups, some really good technical setups. So, a strong market with good technical setups kind of covers up some deficiencies if you're not that experienced of a trader and you don't have the skills necessary to trade things day to day and things that develop intraday and things of that nature. So a lot of the people on the desk had great months in April. Markets changed. You have these massive selling over last week, and then stocks kind of need to reset, and they need to reset in terms of establishing bases and some consolidation so you can have some good technical setups again. And in the meantime, if you're an experienced trader, or even if you're not, what you want to do is find the stocks that on any given day are the strongest or the weakest. Look for second day plays. Those are very high probability plays. That's what we saw in Apple yesterday, and then a third day play in it today. That's the idea behind looking at the 4810 level in BP, which had set itself up nicely in the last few days. If it gets below, you look for a follow-through through a significant level. Then the third thing, of course, is fresh stuff like your Morgan Stanley today. They talked about a possible investigation there, and you want to watch Morgan develop levels intraday and use those levels for trades today as well as tomorrow. So let's quickly take a look at the chart on Morgan Stanley. And what we had in Morgan was a gap down today, and we were looking at this 27 level based on a nice move in the pre-market. So what we can see is in the pre-market right here at around 925, there was some buying at 27, popped about a half a point or so. So it comes back down to the level, drops to 27, and there was actually quite a bit of accumulation below the 27 level. First in the 80s, then in the 90s, and so I maintained a long bias on it based on the initial drive in the pre-market, and then the accumulation. You can see it came back again to 27.5, and we actually tweeted it, and it came back down to 27, where it was a buy, with about 20 cents of risk, and has been trending up nicely since it came back down to the 27 again. So we have this level here. Right now it's right on the intraday uptrend line. Starts holding above this, or takes out the 27.75, you would expect a gap fill on this one. But certainly we have a long bias on this one right now.